I've seen where home buyers go wrong. So I just wanted to jump on and highlight one of the biggest mistakes that I see buyers make, and that is picking their mortgage based only on the introductory rate. There are two reasons why this is a really bad idea. Number one, the intro rate is usually the rate you're on for less than 20% of your total term. And number two, lenders disguise high follow on rates, the rate after your introductory rate, with attractive intro rates, as they know that's the intro rate is what most buyers just look at. What you really should be looking at is the average rate that you should pay over the full term of the mortgage. And number two, the total cost to you in repayments over the mortgage term. Here's a quick example based on a typical mortgage of 300,000 over 30 years. The cheapest introductory rate on the market is currently the 3.45% rate from Haven. But that mortgage is actually over £1,000 more expensive over the whole term and then Avon's equivalent 3.8% rate. And that's because the rate after the introductory rate is higher with Haven. Even worse, if you're tempted by Bank of Ireland's cashback offer, because the introductory rate is only a little bit higher than the Haven rate, it will actually cost you a whopping €28,628 more across the full mortgage term, because the follow-on rate is so much higher. Focusing on the lowest introductory rate often means people choose mortgages that will cost them thousands of euros more than it should. What most people don't realize is that a good mortgage broker will review all of this with you as it's part of their basic training. And even more surprising, most brokers are free to use as they're paid for by the lenders. To get all the do's and don'ts of buying, download our Ultimate First Time Buyer's Guide on the link